Welcome to Billionaires Newswire. I'm Ariana Escalante. Today we have the pleasure of speaking with Australian businessman and property development strategist, Mr. Haj Uppal. Haj, thanks for being with us.
Thanks for having me.
You're welcome. So you've really hit the ground running since day one. You've consistently created success even within sometimes an unpredictable market. So tell me about your background and how you developed interest in the real estate market.
So I've been in the property market for about 8 years now. Before that, I was working in the commercial industry. So Regency sort of started about 3 years ago, and we're kind of focusing both. So we wear many hats. We've got an architectural division, project marketing division, pretty much an all-in-one sort of agency, which is fairly different to what's in the market right now.
Tell me more about project marketing.
So project marketing is essentially we're selling properties off the plan. So properties that haven't been developed yet. We go in there and we assist those developers to sell those properties off the plan, so they can actually increase the equity in their property, satisfy the banks, and then start actually building and activating the construction line. So right now we're currently actively marketing about 2,500 units across Sydney, ranging all the way from out west into the inner suburbs. One of our newest developments will be in Bondi Beach, with a boutique block of about 36 units.
Now, you mentioned that you have been in this market for about 8 years, but I know that about 8 years ago is when everyone was going through the global financial crisis. So how are you able to manage to still succeed in the market?
Well, I think a lot of it was relationship-based. I had a really good stronghold of fairly few active clients in the market. One of our points of difference was, though, that we could actually see the true value of somebody's property. So a lot of times you have these larger plots of land that were being unused. And we came in and sort of showed the true value of the properties.
But I know now the Sydney market is actually really robust. So clearly that's helped you. Tell me about kind of the journey that especially Regency has been on the last 3 years.
So when we first came into the market was still a little bit iffy, and it wasn't that certain. But the last 6 to 12 months, we've seen a massive change in the market with a lot of overseas buyers. So we actively work with those, and they're controlling the market right now.
And why is there so much international interest in Sydney right now?
Well, mainly because our economy is so stable. So the countries that we're seeing all the people coming from are seeing, political duress. So China, India, Russia with the whole Ukraine fiasco. So they're all coming to Sydney where it's a lot more safer, and Australia where the market's always been fairly stable. I mean, we've seen a 10% increase in our market over the last 20 years every year on average.
But you mentioned the last 6 to 12 months specifically has grown a lot. So do you see that popping at some point or leveling out?
I don't think we'll pop. I think we'll see maybe a correction in the market, and we'll see that slow down slightly, but I still think we've got a couple of good years ahead of us.
Great. So tell me about the size of your firm.
So our firm's roughly about 30 people. We've got a lot of consultants in-house. Like I said, we've got architects, town planners, valuers, you name it, we've got it. We've got a huge project marketing team that markets mainly properties into Asia and overseas. So that allows developers to sell out those developments a lot quicker and satisfy banks' needs.
So you guys are really growing, but I know that actually a lot of the firms are kind of downsizing to more boutique size because of the unsure nature of the next couple of years. What do you think about that?
Yeah, so we've seen a few developers, some of the larger ones buying more boutique development sites. I think that's just more of a comfortability thing. I think they're just not sure how long this market will last, and they've seen the market rise and fall, and they've ridden the roller coaster, they've ridden the wave. So we're finding that we've got developers who build 2,500 units a year, building blocks of 200-300 units that equate to that. So if the market were to crash, they've got that security of moving those units onto other buyers.
So when an investor is looking into perhaps getting into property development, what sort of things do they look for?
So they're going to look for things like, is it close to transport, what's surrounding them, schools, shopping centres, what lifestyle they could have. That generally affects the capital growth of the property as well. So if that property is close to the city, or it's going to be close to a new infrastructure, or it's going to be close to the foreshore, your property is going to reflect that in its growth.
The Reserve Bank of Australia is at a 15-year low. What does this mean for individual developers as well as just the entire development industry?
Essentially it means your variable rate will be lower. So a lot of people are coming into the property market and buying investment stock, smaller boutique developments. Some are looking even at larger stuff with a quicker turnover. So it's really changed the game quite a bit.
Having a professional perspective, Why would you maybe advise someone to invest in property rather than other options such as stocks?
Stocks are much more volatile than property. So properties tends to drop maybe by, 10, 15%, if that. We're talking about larger properties. On your smaller, units, you will see hardly a drop, even if there's another global financial crisis. So properties has always been a long-time favourite of people to invest. Sure, they're a lot more expensive and there's a lot more capital, but there's a lot more peace of mind as well.
The development market has increased about 10% per year, like you said, for the last 20 years. So what are your goals for the next, say, 5 years, 10 years with your firm specifically to not only keep up with that growth, but perhaps surpass it?
Look, I think we would like to heavily move into the overseas market a bit more, maybe see ourselves opening a few offices over there so we can do a proper crossover. Right now we are working with some companies overseas right now, and we're doing quite well. One of the other things we'd like to see the company do is maybe move into the development market ourselves, and actually do some boutique developments of our own.
Where are the hotspots in Sydney right now if someone is interested in investing in a property?
Look, I think there's two types of investors who are looking for personal growth and ones who are looking for investment growth. Look, for investment growth, you can't go wrong with the Outer West. I mean, that place is growing substantially. We're looking at 37% increases in some suburbs such as Edmondson Park, Leppington, Liverpool, Ashfield. In terms of a personal investment and something of your own, I'll probably look at the Inner West or Northwest suburbs. So you're looking at Epping, Burwood, Camperdown's fantastic, Erskineville's another great area as well.
Well, thank you so much for your time. We really appreciate it. We're here with Australian businessman and property development strategist, Mr. Haj Rapal. I'm Ariana Escalante, and thank you for watching Billionaires Newswire.